But anyway, let's crack on with the Bund and the Euro stocks. Today's non-farm, so expect probably a quiet morning. We've had a couple of quiet mornings. Yesterday, for sure, was unusually quiet and very light volumes. It almost felt like a bank holiday, and I'm aware that China is on holiday. They were yesterday and today as well. So maybe we might have a similar morning to yesterday. And of course, that's backed up by the fact we have non-farms, which is historically quiet in the mornings. So if we start off with the Bund first, go into the market profile, we can see that yesterday, I wouldn't say that we broke out of an inside day as such. As you can see on Wednesday, we broke out of the of Tuesday's low by one tick, and then came back into the profile. So not exactly an inside day, technically speaking, but the concept is still there, that it's still a tight range and whatnot. And you can see here we left single prints when we started to break out of the 29s level, and then we never really looked back. I remember even when we were kind of testing towards the 45s area, getting close to 53s, we did have a slight couple of pullbacks on the 1 minute and 5 minute chart. You will see it, and we never really got below 28s, if I'm correct. I remember we were kind of pushing towards 29s on the pullback, but we couldn't get below this recent high, and I think 28s was the low that we got to before we pushed higher, and that's a classic sign, of course, that we're bullish using previous previous resistance as support, and that's evident by how far we went up yesterday. So now the VPOC for yesterday is at basically around here at 67s. I'm trading through that at the moment. We made a high yesterday of 96s. So really the Bund is, it looks very bullish at the moment. And if I get up the 60-minute, we can see further confirmation that the breakout was warranted. Got a 60-minute kind of hourly downward trend line from 53s going down. You can see here we traded through to the resistance, more than a few times really. Here you can see here loads of candles going into it, and then we finally broke through. We got exactly the kind of price action volume that, well, maybe not so much volume, but definitely the price action that you'd expect when it breaks a trend line. I've got a couple more trend lines which I've drawn previously, and I think of all of them, strangely enough, this was probably the one where the price action was most apparent, using previous resistance as support, as I said, when we broke through the 29s level. So everything shows that this Bund is bullish. However, saying that, I'd just like to go back to a previous day's profile, and that's earlier on. If I just bring this up here, 150, I think that's 155.42. So quite a long way down from here, right? If I can just get this to show up the amount of volume that's traded here. Alright, it's almost got it. It's so fidgety, but essentially the volume that's traded there is quite high for a double bottom. There we go, 608. And then if we go even further back, we have 155.13s, another double bottom, and the volume traded there is 900 contracts. Now for me, this low is not the best low, but the low below that, the double bottom, is an even worse low than that. So I think maybe not today, or even on Monday, but I definitely think when that turn comes, those are the lows that it's going to be targeting. and that's a good place to kind of have in mind when or if you're planning on getting shorts back on when this market looks like turning. However, right now it really doesn't. It's showing all the classic signs of, classic Bund signs of it going up. So getting into the levels now, we can see that 156.53s, of course, is the previous swing high. That surely will be the first level. We got yesterday's midpoint at 46s. And then below that we have, I think it's got to be an area rather than a precise level. 32s is the start of the single prints going downwards. 29s, 28s, that's where when we broke the 29s to the upside, that's the point it couldn't get back below on the pullback. And then the close of the single prints at 22s plus the VPOC of Wednesday comes in at 20s. So you got a cluster of levels here really, and also 32s, right? It's the start of the single prints to the downside. It's also the close on Tuesday. So you've got a clear indicator here of, I think, where the pivot should be, and that for me would be the point where it would distinguish between bullish and bearish for the Bund, at least in the very short term. As far as long term goes, it's not really for me to kind of stick my head out, but that for me is the pivot level in the Bunds. Going to the upside, we have yesterday's close at 76s. Then we have yesterday's high, which is a double top at 96, which was created after market. And then for levels above there, we got to go to the daily chart, I think, because my profile doesn't go back enough to cover that. And if you just wait for it to load up, there it is. We have, I mean, these are not the best levels, I have to admit, but just something to use as a placeholder, I guess, if and when the Bund does get up here on maybe a bad non-farms number or something. 157.46, you can see here, is kind of a swing low before we went up to the all-time highs. And 157.60 is a low on this day, which was the 29th of April. And then we have a high of the next day at 157.89. And 158.93 is the low of this flag that we created just before the proper shank we had in the Bunds earlier this year. And then the all-time high at 160.69s. Moving on to the Euro stocks now, and I think when I left the office yesterday, it was looking very juicy on the daily chart. However, coming in this morning, we can see it doesn't look that amazing now. Basically, what I'm referring to is the daily candle was a potential bearish engulfing. But into the US session, basically, you can see here, it's just rallied pretty nicely. I think the S&P was overall, from what I saw, a little bit stronger than the European equities, and you can see it's clearly just got dragged up because towards the European close it was definitely trading below the previous day's low. So now that we've got that, it kind of makes today a lot more neutral. And it probably would stop me and a lot more others from trading this non-farms morning. Yesterday morning wasn't great, although, looking back at the charts, exactly what should have happened really, so there isn't much to complain about on that front. And what I mean is, if I get the 60-minute chart up, we can see here we left two gaps to the upside. And generally, two gaps in a row is, well, at least from what we've seen last few weeks with all this stuff happening in China. A lot of gaps left overnight in the equities, and when I think too many gaps are left in a row, it's generally a good fade. I mean, on the back of what I would consider to be relatively little fundamental news. And when you've got the price action going for you, I think you just have to go at least for the fill of the first gap. I think that's a relatively safe trade. Whatever happens after that, I think you've got to maybe take off a little more risk. But that's a good trade. If you get too many gaps in a row, that's generally you'd expect the first one to fill, and that's what happened. And we filled both the gaps basically. So 49s was where I had the price gap on the daily chart, and we can see we went below that, got to 42s, and a nice rejection candle there, followed by continuation, and it's really just gone back into kind of value for the day. So as I said, it makes it a lot harder to kind of take a view now. It would have been a lot clearer if we hadn't closed there. So for me, I'd just kind of stay put in the Euro stocks now. I don't really see any reason to kind of trade too much this morning. Non-farms, again, I'd say, as I've always said, the more important numbers now generally don't tend to be the main number, especially when trading the bonds. Obviously, if you get a blowout number to either side, then you've got to take it into account. But especially given the numbers recently have been very close to consensus, what the number that comes more into consideration now, when you look at the moves that happen afterwards, is the average earnings. Seeing as that number goes, into the inflation number, and that's mainly what people are looking at now. I'd say keep an eye on that. But also another thing to point out is that you guys would have also noticed the last few non-farms have been, relatively subdued as far as non-farms days goes, and because the market's been relatively volatile in between the non-farms numbers, it's actually turned out that non-farms is one of the more quieter days of the month. And I think that kind of makes sense if you look at the Fed's almost numbness to US data. What I mean is that basically we're seeing pretty good data out of the US. I mean, it's not amazing, but it's definitely not terrible. But you've got all these global concerns now, and it seems like that's taking the front seat over US data. So I'd say don't go too crazy on non-farms, because they're definitely not what they used to be in terms of volatility and range. And that's especially true in the equities. With the bonds, you kind of expect it to see, you get a choppy first 5-10 minutes, followed by a potential trend for the next half an hour, and then you see a slow grind in whatever direction for the rest of the day. That seems to be the trend for the numbers we've seen. Obviously, that could change if the numbers way out of line. I'm just saying based on the last few numbers. Just going back to the Euro stocks again, if we really have to go through levels, then they would be to the downside. I've got 60s, which was Wednesday's low, and it's also yesterday's VPOC, so coinciding levels there at 60s, and then below there we've got 49s to 60s, right, which is the gap. Now, generally how I like to trade gaps is, to fill them is fine, but I also like to see them trade some more volume before we move on from there. So that's what I mean, we've got two gaps, one to either side, so that almost reaffirms the fact that it could go either way. I'm sorry about the lack of conviction in the Euro stocks, so I'm just gonna stick to the levels here. 60s, and then 49s, which is Tuesday's high, and then we got yesterday's low at 42s, and then we've got two VPOCs here. Sorry, let me just draw it up there. 33s to 28s are two previous VPOCs, and then going below there we have a couple of levels here actually. We've got 12s to 8s, which is the close and low of the 28th and the midpoint of the 29th. And then below there we have 29.70s, which is a swing low. To the upside, we have 31.41s, which is yesterday's high, yesterday's open at 31.28. And of course, as I mentioned before, we've got 31.09s to 31.19s, which is the gap which we created yesterday morning. And I think whatever happens, I do think that we need to trade some volume through one of these two gaps. So yeah,